Okay, I want to wrap up the journals, and then we're going to turn to the payroll information in here. So if we could turn back to the general journal for a moment, we have a few entries that we didn't complete. This is found on page 135. We did entries A and B. Entries C through G are to pick up other things. Now, first of all, I want you to write up at the top of the general journal, put miscellaneous entries. The general journal's purpose is to record any entry that doesn't have a specialty journal otherwise, okay? So all your checks, where are you typically going to record those? Cash disbursements journal, so they don't go in here. The sales invoices are going to go in the sales journal, so they're not going to go here. But occasionally we have entries like matching FICA, that we don't have a specialty journal for it, or matching group health insurance. We don't have a specialty journal just for that little miscellaneous entry, so we put them in the general journal. Also, adjustments and corrections can go in the general journal. Now, let's look at a few examples. Entry C, allowance for bad debts. What two methods do we talk about to set up, calculate allowance for bad debts? Historical percentage or over 90 days past due. Now, whichever method they use, which one is the preferred one? Historical method. So let's assume that they use a historical method, and they had, I don't know, let's think of $25,000 worth of sales, and their past historical experience has been 2%. Okay, 2% of $25,000 is $500. So their increase to allowance for bad debts is $500. Now the accounts are provided there. You're either going to debit or credit bad debt expense, or you're going to debit or credit allowance for bad debts, but you're going to debit one and credit the other, okay? So you got a 50-50 chance of being right here. I want you to go ahead and put that $500 entry into the account that you think it best applies to. Remember, if it's an expense, that ought to help. Very good. Debit bad debt expense, $500. Credit bad debt allowance, $500. Remember, if it's an expense, it's almost always a debit. Okay. Entry D, set up the earnings on the finance contracts. Every month, or every time we take a contract down to the bank and sell it to them, they're going to increase our bank reserve account. At the end of the month, they send us a statement to tell us the total of all that they've increased. And this month, they increased it $60. So make the entry to increase the bank reserve account. What type of an account, what section in the general ledger does bank reserve account go into? It's an asset account. Okay? So we're going to increase it $60, and the offset is going to go to finance income. That shows where that $60 came from, okay? Debit the bank reserve account, $60. Credit finance income, $60. Entry E. Originally, Stuart Edwards told us that he was going to pay us in 10 days. And so if you were to look back at the sales invoice, you'd find out that we increased accounts receivable for $500 to record Stuart Edwards' promise. Now he's called us back and said, I can't pay you. Can we set up a contract, including interest? And we said, yes, we can do that. Come on down and sign the contract. So he came down and signed the contract, and we're going to take that $500 contract and sell it to the bank. So we've got to take him out of accounts receivable, because he's no longer accounts receivable, and put him into contracts in transit. Make that entry. Okay, LaDonna, what'd you do?
I took the $500 and debited the contracts in transit.
Debit contracts in transit, $500, And credit accounts receivable. What does that do? When we credit accounts receivable, what does it do to accounts receivable? It decreases it, and we debit the contracts in transit, it increases it. Now, both are current asset accounts, right? So we just took one current asset account and turned it into another current asset account. That's what we wanted to do, right? Okay. Entry F. We found a check number 1262 that wasn't recorded in our cash disbursements journal. When we were balancing or reconciling the bank statement, we noticed check number 1262 cleared. Nobody told us about it. You think that happens in real life? And so we find it, we say, oh no, we go back to the cash disbursements journal. We've already totaled it up. We've already posted it. Could we enter that check then in through the general journal? Sure. It was a $400 check for inventory. So enter that check into the general journal. It's for furniture inventory. Okay? So we're going to enter one amount into the bank account. We're going to enter one amount into furniture inventory. Pick which one. Okay, Carol, what'd you do?
Credit the bank account, debit furniture.
Very good. Credit the bank account because we want to lower it, right? We're reducing it by $400 and debit the furniture inventory. Okay, entry G. We need to set up the depreciation for $33. Now this entry always looks the same. Always looks the same. We're going to make this entry every month. Okay, Dean, what'd you do?
I debited depreciation expense
Debit depreciation expense and?
credited depreciation.
Very good. Debit depreciation expense credit, accumulated depreciation. What's the entry going to look like next month? Same entry, okay? Now again, a little trick is it says expense, so what is it? Debit. Okay, that ought to help.